What I find intriguing about the nature of this correction, if you want to call it that, or the potential of a recession, is that it is in the foreshadow and then the shadow of $6 trillion.
Hello and welcome to the Daily Crypto. We have Kevin O'Leary with us today, and he's going to share his thoughts on why he thinks Bitcoin could see new highs in the near future. You don't want to miss out on this, because this video will definitely give you an edge over the market to make some sweet profits. Let's continue with the video.
I've lived through many cycles, obviously, as everybody has on this call. What I find intriguing about the nature of this correction, if you want to call it that, or the potential of a recession, is that it is in the foreshadow and then the shadow of $6 trillion worth of printing. And so you think about what occurred during the pandemic, which is unprecedented in any economy's history, to take that much and print it in basically 30 months and not to expect inflation. Well, of course, that's why we have what we have right now, a 40-year, new high in inflation. But at the same time, if you could figure out the printing presses were going to stop, you would be forecasting a new leg up. And here's my thinking on this. There's two bills right now in front of Congress. And so one is a watered down version of Build Back Better. They're calling it anti-inflation, but everybody knows is a joke. This is very inflationary, but it's a spend over 10 years. So that's one attribute of more printing, which would maintain an inflationary stance and, of course, keep the Fed raising rates, which is not good for equities.
With inflation on the rise, many people are scared of the economic conditions, but Kevin O'Leary has a different view on this. Since the Fed printed trillions of dollars in the beginning of 2020, inflation was expected to rise. However, now that it has stopped, investors can speculate that inflation is only going to come down from here. According to this theory, all financial markets should see another rally, especially risk-on assets like Bitcoin.
It will be impossible to get anything done, and that's a great thing. That's a wonderful thing, because markets love Washington gridlock. And I think whether you want to say it's PE expansion or earnings expansion, and it may be both, we're going to continue this leg up. Now, not 30%, but if you have an option between making 8 or 9%, including div distribution and yields on the S&P 500 at a 17 to 18 PE, or getting 2 to 3% on long duration treasuries, I think that's a no-brainer. You're going to stay long equities, and that's my position. I am underweight fixed income big time. I don't care when the Fed stops raising. That's another debate. Do they do 50 basis points? Do they 75? We're going to find that out. They may do 50. The narrative has changed to a soft landing for the first time in decades. Nobody gives credit to the Fed for ever delivering a soft landing, because they never do. Maybe because of the backwater of all this printed cash, they have that opportunity to do this. So bottom line is, so I make it very clear, bottom is in. We're going to be flatlining for a while we wait to see what the Fed does. But if we get what I think is going to happen November 8th, Katie, bar the doors. Gridlock in Washington is a wonderful, wonderful thing.
Kevin says he's long on equities because after the election on November 8th, Washington legislation goes into a gridlock during which no other bills are passed. This usually causes the markets to rally by up to 10%.
Fidelity simultaneously, they each put $200 million of equity into Circle in the F round at a $9 billion valuation, less a discount they got, which I'm going to assume is 15%. That is huge. Remember, this is a very controversial asset class. Stablecoins are a shit show right now. And there you have the largest, most conservative, completely compliant institutions on earth putting $400 million. Now, I have to disclose, okay, I participated in that round. I saw that happening, so I'm in that round. I own a piece of Circle now on the F round beside Fidelity and BlackRock. And I did it because I saw them going into it. I would have never have done that without the endorsement of such compliant SEC-regulated entities making a bet in the middle of a shitstorm on stablecoins. It's a turning point for crypto. That's what I think.
BlackRock and Fidelity putting $400 million into Circle is a huge milestone in the crypto world. Even during these times when stablecoins have had an extremely bad reputation, we see huge companies like these putting in hundreds of millions, which goes to show that they see the true potential of stablecoins in the future.
I'm totally transparent on my interests here. I want to get some kind of payment system for my global businesses when we're transferring cash. I want to use USDC between here and Geneva. We index. I have an indexing business. So we're constantly, every day, taking US dollars, ACHing it over to Zurich. They charge me a fortune for that. It takes 36 hours sometimes. Then they nip me on the FX trade when I go into Swiss francs and buy a Nestle or a Roche or whatever I'm buying to index it. And then they screw me again on the way out. I could completely eliminate that with a payment system. And everybody knows that. So there's a lot of utility. Second reason you got to be bullish here is this. Both sides are supporting this, Dems and Republicans, because it makes the dollar, if you get a U.S. stablecoin policy in place, it makes it the default payment system of the earth. Not the Swiss franc, not the euro, not the British pound, not the Chinese yuan, the U.S. dollar. So this is coming back to the House on the floor in September, and it may be the first piece of legislation that provides the launch ramp for more crypto policy. Now, you know there's a war going on between the SEC and the other regulators, a turf war on crypto, but you can't deny crypto is here to stay. In fact, I believe in the next 10 years, it'll be the 12th sector.
O'Leary goes on to explain how inefficient the current payment system is and how big of an impact stablecoins will have. Imagine being able to transfer millions of dollars instantly for just $1 in fee. Wouldn't that be extremely convenient? As soon as stablecoins are regulated properly, we'll see more and better forms of payments available to the public through stablecoins.
And again, I'm tracking this from indexers. So if one of my core businesses is to index for sovereign wealth, 70% of capital that's invested around the world, and it may be, when we measure it again, 75%, is in sovereign wealth and pension. And so I can report to you faithfully that they own no crypto, zero. And so for all the excitement, and the reason they don't is they don't have any infrastructure to be compliant. It's not just that they're not allowed to because it's not regulated. They have no infrastructure to market. And so that their compliance departments can monitor whether they're over-levered, whether they have whatever their mandates are. Let's say you're maxed out at a name at 5%. They don't have any infrastructure to make that work like a stock or a bond. They're working on that. So is FTX, so is Binance. All the major trading platforms are trying to provide that infrastructure. But as it stands right now, last year, up to just before the correction, they were using public Bitcoin miners in the US as a proxy to own Bitcoin, because it traded in direct correlation, and I know that because I indexed for them.
Big money institutes like the sovereign funds and pension funds don't have any crypto in their portfolio because they don't have a proper infrastructure to get themselves exposed to cryptocurrencies. Once the SEC lays out proper regulations, we'll see these institutes quickly come up with a way to add crypto to their holdings because they will be compliant. Even if they put a little percentage into crypto, it'll amount to hundreds of billions of dollars, which will take the crypto space to new levels. Do you think stablecoins will be regulated anytime soon? Will they do more good than bad? Let us know what you think in the comments. Don't forget to like this video and subscribe to our channel to stay updated with the latest market news and events. See you guys in the next video.